Hey everybody, it's Chuck Barone here. Thursday, November the 16th, 2023, and man, is time going by fast. Can you believe it's only 1 week till Thanksgiving? Holy crap, man, the next thing you know, it's going to be ho, 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 and out goes $1 million on presents. Anyway, holiday season thick upon us, guys. But before I get myself rambling away here, let me take a half a second. Welcome everybody to the show, and as always, thank you guys for your support. You guys showing up here means the world to us. We appreciate it really very much. All right, so let's talk about these markets today. Well, markets kind of mixed today, but I think that the bias now is certainly going to be higher. We got the jobs report today, going the way the Fed would like it. Everybody now talking about this beautiful, perfect, soft landing. Everything seeming to go the way the Fed would like to be seeing it going. Economy seeming to be slowing down a little bit. Bond yields falling. Dollar falling. So it looks like, the Fed really having its way. Now, we'll see if, is this a streak of good luck? Is this actually their policy doing great things? We're going to have to watch it all play out. But right now, this inflation fight, well, we're going to talk about this in a little bit later. Anyway, so let's talk about markets today. Markets. So jobs come in higher than expected. So the market not quite sure how to digest that yet. So you had some mixed results in the stock market today. The Dow, obviously the narrowest of the indexes, falling 45 points today, sitting at 34,945. The NASDAQ gains 9 points, a very small gain, 14,113 on the NASDAQ, and the S&P gains 5, 4,508 on the S&P. So the broader markets did okay. The Dow not so much, but pretty much a non-event in these markets today. I think you might see a little bit of forward momentum to the upside to finish this week out. I think, bond yields, if they continue to come down again tomorrow, will have a positive effect on these stocks. And I think market might have a little bit of room for a rally before we start seeing some earnings that are negative and we move toward what could possibly be a recession. The bond market today rallying again, bond prices up, yields falling. The 10-year falls 9 basis points, sitting at 4.44%. It wasn't just that long ago, guys. This was threatening 5%. So down half a point. Wow. The 2-year falls 7 basis points, sitting at 4.84%. The 2-year had been above 5% for quite a while. So bond yields really, really coming down about it. The 10 years is at least a half a point. I don't think the 2 years is quite that yet. But yields moving down, bond market anticipating Fed rate cuts. A lot of analysis I've been reading saying probably by March the Fed will be looking to cut rates. I don't know, guys. This inflation fight is not quite over yet. So I think talking about, rate cuts, well, we'll see. Dollar today continues its slide, sitting at 104.41 on the index. Weakening was just around 106. So the dollar coming down into a more normal range. Still super strong. Don't get me wrong. Anything above 100 is a strong number for the dollar. But not as strong as it once was. And as the dollar comes down, gold and silver, they go up, right? So gold today jumps $21.60, sitting at $1,980.80. Silver up 29 cents, $23.71. So a little bit of a rally in gold and silver over the past couple of days. I think, like I said, 2,000 gold, 25 silver. It won't be long, and those are going to be the floor numbers for gold and silver. And I don't think it's going to surprise anybody that's in those markets or watches this show. Oil today, oil really cratering today, down $3.73 per barrel. Now sitting at $72.93 for a barrel of West Texas Intermediate. It's like I've been telling you guys, oil seems to want to trade between $70 and $75 a barrel. Here we are now at $72.93. I think it could maybe break down below 70 but I wouldn't be surprised to see it reverse back up, get back into that trading range where it seems to be the most comfortable. That would be between $70 and $75 per barrel. Even actually, funny, seeing a little bit of relief at the gas pump. I paid 35 cents a gallon less today than I did the last time I filled my car up. So, yay, oil coming down, gas actually coming down with it. Bitcoin today has a little bit of a crummy day today, down $1,639. Boom. I'm guessing that's profit taking though. Guys are not going to ride this all the way down to the bottom anymore. 35,994 for Bitcoin. Still a good solid number, guys. And if they're profit taking, good for them. You know, this was down at 16,000. You had a $20,000 profit sitting there. It's not so unreasonable to take some of that off the table. All right, so let's talk about what we need to know today. First thing was obviously jobs coming in. Jobs coming in at 231,000 new claims versus 220K last week, or 220K expected. Job market softening up. These numbers had been under 200,000 for a while, or around 200,000. Unemployment rate actually ticks a little bit higher, now standing at 3.9%. This is exactly what the Fed was hoping for. They want to see demand for jobs coming down because they believe that big demand leads to big wage gains, and then those wage gains, that money entering the economy, pushes prices higher, along with several other reasons, but that's one of the big ones the Fed really believes. Right now, the Department of Labor is saying that there is actually 1.5 jobs available for every person looking for a job. So jobs are still plentiful out there, even though more people are getting laid off. Jobs kind of moving the way the Fed wants it. I've told you guys a few times, the Fed looking for a number about 285,000 for the job losses per week. So we're getting closer and closer to that. Things are going to work the Fed's way. I was out yesterday, so I didn't get a chance to talk with you guys about these inflation numbers. CPI coming in yesterday, 3.2%, down from 3.7. Core at 4.0, down small. So the market rejoicing, thinking this inflation fight is over. Now I'm seeing even some respected economists talking about rate cuts next year as we can move the focus from inflation to the economy. I got to tell you though, I'm not so sure I'm buying in on all this, guys. You know, the inflation rate, the top line CPI number was 3%, 4 or 5 months ago. Went 3 at 3, 3.2, 3.7, 3.7, now back down 3.2. Well, I guess that's kind of making progress, right? You still got core numbers sitting at double what the Fed's target is. So I don't know, man. This might be a little premature to call it a day here and say this inflation fight is won. I think that any kind of weird aberration in the inflation stuff, something goes wrong in the Middle East and oil spikes back up to 100, that the dollar weakening, import prices have come down quite a bit, and the report today was a big jolt, down almost 1%. But as the dollar weakens, is that possible to keep that? Doubtful. I don't know. I got to say, I have my doubts that this inflation fight is over, that it could possibly be this easy to eradicate inflation with just some rate hikes. We saw the Fed do, and I'm old enough to remember, and have read pretty diligently about the last great inflation fight in the 70s and into the 80s. They had to raise rates all the way up to 20%, the overnight rate. Mortgage rates hitting a high over 15%. And every time they declared victory prematurely, inflation would spike back up, causing them more rate hikes. So I hope they're not going to make these same mistakes they made back in the day. You would think these scholars, Powell and the rest of these Fed governors and the guys who came before him would be students of history, would learn the nuances. I guess, you can't call Volcker anymore. I talked to him personally, but I think that we need to be cautious about calling this inflation fight over with. And of course, we're going to be here to bring you guys the data as it comes. Quick note, real estate. I've been talking to you guys about real estate, how prices have been staying high due to some weird circumstances. Ordinarily, it's demand that pushes prices higher. And that kind of is this time. But the reason demand is outweighing supply in real estate is because of the Fed's policies. So they bring mortgage rates down to 3%. Everybody buys and refis at, let 3 or less or 3.5 or less. Now they start raising rates like crazy. And all of a sudden, houses are completely unaffordable. You got real estate transactions canceling at the highest rate I've ever seen, and I've been in this business almost 30 years. 53,000 real estate contract cancellations just this past month. We've been averaging almost 60,000 cancellations a month, which is an outrageously high number. I think people buying real estate, as they're actually that a $2,700 a month mortgage payment, you might be able to digest that for a little bit. But when it comes time to actually sign your name on the dotted line and commit to 30 years of payments at $2,700, $2,800, $3,000, whatever the number is, buyers getting cold feet, blowing out. And I don't blame them, man. Who the hell wants a mortgage like that? Real estate, I think what's going to end up happening, now you're starting to see with rates this high, buyers, it's just moving to a buyer's market now. Sellers actually starting to reduce their prices pretty dramatically. Nothing like it's going to be. Real estate prices, let's just say it, guys, ridiculously inflated. Okay? We know that the numbers they're talking, we're talking $450,000 for a basic starter house, 3-bedroom, 2-bath, 2-car garage, tiny little lot. I don't really believe that's sustainable, not only here in Las Vegas and in Nevada, but around the country. Maybe California can do that. Maybe New York, Texas, some of these places where there's a lot of industry, bigger populations. But a town like Vegas, it's a service town, casino town. Sorry, man, these casino workers are not all going to live in $500,000 houses. They're not. This was my mantra back in 2007, where my office nickname was either Dr. Doom or Dr. No. I would ask the question, do you honestly believe every bellman and busboy in Vegas is going to own a $500,000 house? Do you believe that? And I can now say that pretty much about the whole country. Do you really believe, the manager at McDonald's and the regular workers, the $10 to $15 an hour people, you really believe they're all going to live in $500,000 houses? I just don't see how that's even possible. So as I was saying before, rates have to come down, prices have to come down, or people have to earn more money. And the numbers for that are pretty dramatic. Like they'd have to earn 62% more money, or real estate prices got to come down 40%, or the Fed has to cut rates back down to 3%. So it's just the real estate market's going to be a riot to watch. Of course, again, we're going to bring you guys all the news on it, but crazy times, never-ending crazy times. Now we're going to move into the holidays. You're going to blink your eyes, and it's going to be a new year, and it's going to be an election year with some very angry people, some very, where's our savior, guys? Because if it turns out to be Donald Trump versus Joe Biden again in 2024 for president, I think people would turn out because they both hate the other side so much. But I got to say, it would probably be the least interesting or exciting election in my lifetime, because I don't think very many people want to vote for either of these guys. So now you get down, when you're in the voting booth, you're not trying to pick the best or the brightest. You're in there trying to pick the least of the evils. Anyway, guys, times are nuts. Tomorrow's Friday. We'll be here to bring you guys the wrap-up. We appreciate your patience. Sorry for missing the last couple of days. Had some big events to deal with. Anyway, good to be back. Good to see all of you guys. Like as always, thanks for your support. We'll look for you guys in the comments with your questions and comments. I'll be on there today going back and forth with you guys. I look forward to it. Until tomorrow then, guys. Take care. Thanks.